My name is Samuel Tamo and I am a Forex trader from Sierra Leone, and I'll be teaching you how to trade Forex and to understand the basics of the Forex trading market. And not just that, I'll teach you something that you've never heard before, and that is the business that is surrounded in the Forex market. You know, a lot of Forex mentors tend to teach you about Forex, about the charts, but where are you going to get the capital to trade? Right? So I'm going to also teach you the business of Forex in this channel. So subscribe to my channel and follow me. So liquidity is what we are going to be learning about today. Get ready. So today we'll be learning about the three types of liquidities. Okay? What do we mean by liquidity? Liquidity simply means the access to the markets to buy and sell, right? To instantly place a trade and then you get to have your results, whether you're going to win, you're going to lose. That is huge buying volume, or there is a momentum for huge selling volume, right? So everywhere you see there is enough candlesticks that are buying or enough candlesticks that are selling, these are places that we identify within the chart, right? We identify them as places where you get high buy liquidity or sell liquidity. So it's not like a bigger term that will confuse you one way or the other. You see, Forex is quite easy when you get the knowledge. I won't say it's a get rich quick scheme, but I will tell you that as you go along the way, right, you keep on getting the knowledge, you keep on understanding, especially understanding key terms like liquidity, right? It's going to help you. If you go through my past videos and other videos that I did from the history of Forex to teaching you how Forex started, you will understand a lot more. So when we talk about liquidity here, we have three types of liquidities, right? Type 1 is old highs and old lows liquidity, right? You know, sometimes the chart makes higher high and then higher lows. The long line that you see that is going all the way to the top is the line that is going higher high. The one that you see that goes all the way down and then is connected like a V, right? It's trying to go up, is what we call, the one going down is the higher low, right? Is the higher low, and the one going up, what is the higher high that is going up, right? That's if it's an uptrend, right? You know, we have different types of trend in the market, so you should understand that. Another type of liquidity that we have is the trend line liquidity. So if you want to know where liquidity, of course, just as I told you, is where they are buying enough or they are selling enough in the market, right? If you not want to know where the markets, for example, if it's an uptrend, this one that you are seeing here is an uptrend, meaning the candlesticks are going up, all the way up, right? If you want to know where you can buy enough, or places where every time it goes there is a buy there, you have to draw your trend line. So trend line liquidity is very important. If you know how to draw your trend line, you can know that every time the market comes to this line and touches this line at this particular moment, right, there will be a huge spike to the top, meaning the candlesticks will go all the way to the top because it's an uptrend, right? It doesn't always like come all the way down, but anytime it touches this line, it goes all the way up, right? So when you draw your trend line, you can determine the places where there is high liquidity, high buy liquidity, where people are buying a lot. You can always determine that. So that's another type of liquidity. And of course, just as I told you, type 2 liquidity is trend line liquidity. Can be found when prices forms a diagonal or a slant form of lows and high. So as you can see here, right? If it's an uptrend, you draw your trend line. When you draw your trend line, definitely you are going to see where the money is. So the places where there is high buy liquidity or high sell liquidity are places where you stand a chance to make a lot of money when trading the Forex markets. Please, if you want to understand more, you could reach out to me, and then I have a free class. Subscribe to my channel, and I have books that I give to people, which is absolutely free. You don't have to pay for it. My classes are absolutely free, and all you have to do, just subscribe to my channel, reach out to me. My email is also on my channel. You can send me an email and I'll reply to you promptly. Right? So just as I told you, this is something like a recap. We have all lows liquidity, right? All lows liquidity. So let's say this is a downtrend market. You see the candles are going down, right? So we have uptrend, we have downtrend, we have ranging market, and we have choppy market. Now we have what? All lows liquidity, meaning liquidity that has taken place before, right? So every time it's going down, you see certain places where you can determine certain places where every time it gets to, right? That's previously, not the new one. Every time it gets to those places, you can see there is high volume of selling taking place there. So you have to look, because it's always historic. Why the candlesticks are there? Because it's human behavior, it's psychology. Humans, what we did in the past, we tend to repeat it in the present. So you have to look at what happened in the past also. So we also have equal lows liquidity. So let's say, for example, you are building a wall, right? You build a wall this way on your left, and then you keep on smoothing the ground. You do it for about a mile, but eventually you are going to do it in a way also wherein you are going to showcase building another wall again. So it creates like an equal low liquidity and then an equal high liquidity, which is something that you must keep in mind. So this is the final one, which is type 3 kind of liquidity that you should look out for. Type 3 kind of liquidity. So if it's a downtrend that is it's about to go down, right? Where can you find a very good kind of liquidity, right? You look at the chart very well. You zoom it. You put your finger on either your iPad if it's a touchable, or maybe if you are using your laptop, right? You are using TradingView. You make sure you zoom it in like 3 times so you can see it much more clearly. It will form an M, right? If the chart is going down and then it forms an M, where it forms that M, you draw a line underneath. You see that it has equal liquidity, right? Equal liquidity there before you see there will be a breakout and then you see a spike. It goes all the way up. If it is something that is also for example, it's an uptrend, it's going up, right? It forms a W. You see it goes up and then forms a W, and then you draw your line at the top of it because it's about to have a breakout, right, on that line. Because once it forms equal liquidity, there's going to be a breakout, and then it's going to